Today I'm talking about selling a home in a seller's market, and this is not intended as legal advice, and these ideas are subject to errors and change based upon market conditions. When selling a home, I like to mention two possible market scenarios. Those would be high inventory with high buyer demand or low inventory with high buyer demand. Low inventory with high demand tends to foster rising prices that often go above market value. High inventory with high buyer demand can still see rises in prices, but tends to be experienced most with the best homes available. Interest rates also impact demand, with high rates putting downward pressure on prices and low rates putting upward pressure on prices. So first, I recommend considering which type of market you're experiencing and considering interest rates. Also consider the price estimate and demand for your home based upon the location, floor plan, upgrades, required updates or repairs, and the functionality and age of the home. The best homes tend to invite the highest interest from buyers in any particular price point, but a hot market doesn't, in and of itself, guarantee high demand for any particular home. So it's important to evaluate your property with a realistic and objective point of view when listing and choosing your price. Even when a seller secures a contract for a price above recent sales for comparable homes, it's important to understand that lenders require an appraisal. So it's important to secure buyers who can cover any difference between the appraised value and the purchase price with their down payment. Hot markets don't last forever, since as home prices rise across a market, less people can afford them, especially if interest rates go up. So be sure to list your home before a market shift when possible. While a seller might miss a market peak, evaluate the benefit of waiting if the market shifts where buyers effectively put their home search on hold while waiting for the market to bottom. Buyers don't like to purchase when there's a chance the market could drop. All this said, a hot market is a good opportunity to highlight some contract strategies for home sellers to maximize their income and to try and increase their chances of a closed sale. After we list the house and start getting offers, we want to start by asking some questions of the buyers. Can you tell me about your buyer? What's their situation? Has your buyer seen the house in person? Have both buyers seen the house if there are more than one? Do your buyers have any offers submitted on their homes? Do your buyers have any offers accepted on other homes? If a cash offer, does your buyer plan to get a loan regardless of making the cash offer? That happens sometimes. While the buyer's agent may or may not choose to answer these questions, probing for an honest and transparent answer can give some confidence in their offer. And if the buyer is tight-lipped, that can be cause for more questions. Either way, once the seller has an offer or multiple offers, there are a number of terms that can help ensure a higher chance of the sale closing and for top dollar. But let me suggest that before you list the house, go ahead and order the HOA files, the Homeowners Association files from your HOA management company, if there is one. The contract allows a buyer 10 to 15 days usually to get that paperwork, and the buyer can terminate within 3 days of receiving the HOA documents. That's by default a free termination option period. So you want that 3-day termination period to start as soon as possible. Also consider opening title with a title company before listing or when listing the house. Since the title is due anywhere from day 1 up to day 20 of the contract, being able to deliver the title commitment within a few days of the effective date of the new contract can greatly reduce the time frame a buyer has to terminate and get their earnest money back. Next, if you have an older survey, consider ordering a new one. While it may cost you a little extra money providing that new survey to your buyers, it will increase the chances of an accurate survey and thereby decreasing the time frame the seller could have to object to the title policy, since the title objections are connected to the buyer receiving not only the title commitment and exception documents, but also receiving the survey. Alternatively, a seller can ask the buyer to pay for a new survey if needed, and that may save the seller some money, but that could also increase the buyer's time frame and ability to terminate and to get their earnest money down the road. Now on to the contract terms. Number 1, cash is king. There are fewer contingencies compared to an offer contingent on financing. Number 2, remember to get a pre-qualification letter and possibly ask for proof of funds for the down payment. The pre-qualification letter needs a contact from the buyer's bank, ideally. Also, it doesn't hurt to ask buyers to provide a pre-approval letter as well. A buyer can provide a pre-approval letter that verifies the buyer has taken steps to get a more in-depth level of scrutiny and approval. Number 3, push for a shorter or no termination option. Something like a 3 to 4 day termination option for maybe $300 to $500 per day in a really hot market. Number 4, ask the buyer to drop any financing or appraisal contingency. This increases the chances that a buyer will cover the difference between the appraised value or the appraisal value and the purchase price if the appraisal comes in below the purchase price. Number 5, consider asking for more than 1% in earnest money, possibly 2% instead. Number 6, ask the buyer to pay for title insurance. Number 7, limit the number of days the buyer can object to the title commitment down to maybe 1 to 3 days. And number 8, ask the seller to forego a residential service contract fee. That is a fee the seller sometimes pays to give the buyer a 1-year warranty that covers the buyer if things like the water heater or the HVAC breaks. Number 9, ask for a short contract to close time frame, so just a shorter closing period. And then number 10, ask for a free lease back. I want to conclude by saying that these are strategies and ideas to discuss and consider in consultation with your realtor and with your attorney if you consult one. Some or all of these strategies may not be appropriate in the case of your home sale, but they are certainly ideas that can and should be considered in a hot market for a desirable home. However, as the market adjusts and corrects itself, expect to adjust your home selling strategies with the buyer demand to be sure you don't end up selling it for less than you could have if you were more realistic from the start.